Oh, yeah. All right. Japan. JXY, the Japan Yen Currency Index, had a bunch of alerts yesterday. Japan against a whole bunch of currencies, the Swiss franc, the Australian dollar, the New Zealand dollar. And if it looks like a duck, quacks like a duck, it's most likely a duck, guys. So let's just look why all these thresholds, these simultaneous thresholds were breached for the yen against all those currencies. But instead of just going currency pair by currency pair, I'm going to look at the index as a whole. So if there's synergy with a multitude of stocks breaking currency pairs against the yen breaking it out against them, the index should not be too far away to follow, guys. So what do we have? Monthly candle chart. Okay, we have nice. Here's beautiful. Wow, I love that. Where's that close right here? That close is 98.7. 98. Look at that, man. 98.7 the close here. Monthly defined candle closes, man, is insane. The precision. The wicks, remember, it's noise, intra noise. So if it's the more it's tested, 12-month moving average going downwards, respected, bam, goes down. That was important resistance right here. And that resistance is close to previous support and resistance, man, right here. If I extend. So support, and the more it was important support, the more it becomes important resistance. Sloping downwards, weight of evidence, you're going down until the price action closes above the 12-month average. Then the 12-month average starts skewing upwards. Then you're back in an uptrend. All this time, 3 years later, to go test this support to turn resistance. And 1 month, unable to close above it. Second month, third month, unable to close above it. And if you would have got in and you would have thought, it's time to go, you would have got whipsawed because look at the move back down. Most likely your sell stop, you would have got triggered out. And then after that, what I see here is lower highs, higher lows, equal lows, but less and less contracting, volatility, patterns within patterns. So right now I have a tight pattern. If it breaks out here, that target's going to probably be just a little above this one here. Okay. So that measure move will be right above that zone right here, all the way to 100. So what most likely what's going to happen is if we get a monthly close here, right away pretty fast, we're going to hit here. Maybe a wick that's going to go out, noise, a close below. And after that, maybe we're going to explode from that bigger pattern. So if I take a narrow and do an implied measure move and the greedy one. So it'll be this. Oh, let's do the very greedy one. Further away, least probable target. Wow, that's insane. It brings me all the way down to 117 area. And look at that. I love when I have this type of harmony targets that get back close to previous important patterns that broke down. So this support here of this big multi-year, couple of years, breakdown. And years later, we're probably going to go and retest that breakdown line, guys. Maybe. We're not there yet. So what needs to happen, you need to break out from this pattern here. Have a target that's going to reach this zone here, the 98.7 zone. And after that, see what happens. And if we could break out, close above that, then you might hit some resistance right here. Natural resistance. But after that, look, it's a vacuum. Red candles. There's no greens. I don't know where the potential support resistance is going to be. So after that, So I don't know how many months we are away from that, but that would be the move. We're going to zoom in on the weekly, but the price action is starting to close above the 12 monthly average. It's going to be it's pretty tight for a while, so you don't have a lot of price action below 12 monthly average. One or two candles above, and it's probably already starting to angle upwards. Let me check. Yeah, it's already angling upwards. 90.67, the 12 monthly average, and now 90.78. Right here, I was looking at. All right, man, let's zoom in on the weekly. Okay, here we are. Here are my lows, my higher lows. I was a lot of sideways action for a while, so all that Ichimoku cloud defined the support and resistance is thinning. Not much in the way. Whoa. Arrow outperforming the SPX. The only thing that was missing right here, why it's not green, is because you're below 30-week average. It's declining. But right now, you see it's green. That's a couple of the stands, checks. Inclining 30-week average, above 30-week average, outperforming the baseline, the SPX. So that's just the beginning of that embryonic stage 2 right here on the weekly candle chart. I don't have the volume. But right here, you're starting to see these levels, these weekly defined breakout levels. Broke out, went through another support resistance, broke out above another one. There's a lot of them. They're minor compared to the monthly defined resistance that we're going to hit right here. So right now, I don't know how it's going to deal here. It's going to go through this month. It could pull back, hit that weekly define, and then after that go out, hit that higher up monthly define breakout level, bounce back here to the previous resistance and support, and then maybe give it another go. Hold on, remove that, clean that up, clean that up, clean that up. Okay. Whoa. And that's my crazy target over here, 117. Monthly defined support, resistance, monthly defined resistance. Here we have a little further away, natural resistance, monthly defined. So that's like my zigzag action, right? You never go straight to a target. Often you look at a chart, you see your entry, you see your sell stop, and then you have the measured move, and you see just those numbers, and your brain it connects the dots and makes straight lines all the way to that. But that is the trap. That is the mental trap. You don't know when to expect the bounces on your head. You're going to have one crazy candle that's going to go there, or just candles green. And that's going to hurt you, because when the pullbacks happen, and they will happen, you're going to be scared. You're going to go in panic mode. You might not, you're going to decide, it's gone too low. I'm going to protect my profits. And then you don't follow your trading plan, and then you exit. And then you wonder why you can't hold winners all the way to their targets. So one of the tricks, emotional tricks, is to, by knowing where it's going to bounce, either use Fibonacci or do like I do and define your monthly defined resistance. So now after that, each time you go up, it's bouncing back. Okay, that's my monthly defined resistance. Then it goes back down, and then you know how deep it's going to go back down. Well, you know that monthly defined support is now, the resistance is now support, etc. So now you're going to imagine it zigzagging all the way up, and you won't get scared. You'll actually know good entries on those pullbacks. You'll be ready to enter, add positions on those pullbacks when it starts reverting back upwards, when the Mansfield starts going back down and starts going back up. And you say, okay, pullback complete. I'm going to add positions. And that helps a lot emotionally when you know what to expect, when you've prepared. And after that, it's crazy, since I've been doing my scribbles, all these lines, and time has moved on. Check out all my podcasts. A lot of the scribbles hitting these lines, bouncing up and down. It happens. It's not magic. It's support, resistance, doing their thing. Price action sometimes sinking through. But after that, you have pretty much an area where it really bounces back. And the more you expect, the more you prepare, the more emotionally you're not scared. You know what's gonna, you anticipate stuff, you know where to add, you know where you're safe. You know that if you start making lower lows, like in Stan's book, there's a provision that if higher lows, higher lows. And just by his observation, he knew that if the price pulled back below, even if it bounced back up, if it pulled back below a previous weekly defined pullback, a low, that's not a good sign. For an uptrend, you need those higher lows, right, and those higher highs. Uptrend, either through the highs and the lows going the same direction, you know, an uptrend. You also know the 30-week average going upwards, you know, an uptrend. The Ichimoku cloud, defined resistance going in an support going in an uptrend with you. A whole bunch of clues, and everything's derived from the price action. So if you don't have that type of behavior, no matter what it is, 3-week moving average violation, lower lows, sell stop triggered, you're out. What are the tricks? Is there other techniques? Is that he had the 3 points trend line, a break on the fourth. So if you had a trend line, you were zigzagging up, 1, 2, 3 points. On the fourth break, take half your position out. So those are all ways to remove yourself from a slowing down trend, from a trend that's not A++ anymore. It's not a question of if it's going to go into stage 4 or not, if it's going to break down, if it's going to continue up. That's after. It's a new reassessment. Once you're out, you reassess, you see if the stock has repositioned itself correctly. If it goes back in stage 2, you play it. But those are all techniques to be able to take your money out and ride the trend as long as possible. And when it gives clues that it's winding down, you get the hell out of there. All right. So Japanese yen, that's how I imagine it playing out on the weekly. And on the big, greedy pattern is us going back all the way here, guys. All right. Thanks for watching. Thanks, guys. Don't forget to subscribe. I appreciate it.